Welcome back to another episode of the Vital Strategies Podcast. I'm your host, Patrick Lonergan, and we're thrilled to have you join us today as we explore the world of mergers and acquisitions and uncover the secrets of Speed M&A. In this episode, we have the pleasure of sitting down with a true expert in the field, Robyn Siers. Robyn brings a wealth of experience and insights to the table, specializing in executing M&A transactions with speed, efficiency, and precision. Our conversation today is tailored to high-earning entrepreneurs wanting to gain a more detailed understanding around mergers and acquisitions. Together, we'll explore the strategies and tactics that entrepreneurs can leverage to navigate the fast-paced landscape of M&A and unlock rapid growth opportunities for their businesses. So whether you're a seasoned entrepreneur looking to expand your portfolio or a newcomer curious about the world of M&A, you're in for a treat. Without further ado, let's dive into the episode and uncover the secrets of Speed M&A with Robyn Siers. Robyn, I really appreciate you joining us here today. I'm excited to get into this discussion about mergers and acquisitions and sort of all of the law that is stacked up around that. I think we think about our clients as entrepreneurs. Everybody sort of has this thought process of eventually selling their business or acquiring their competitors and growing it into something that they can exit someday. So I think this is going to be very useful to our clients. So thank you very much for joining us.
No, absolutely. Thank you for having me, Patrick.
Yeah. And so I think it's interesting to just look a little bit at your background, because you've got a diverse background in everything from sort of the technology space to finance to working at a big law firm, and you've sort of taken all those experiences and wrapped them together into something that is, I think it's the Speed M&A process, which is the exact opposite of what I think about when attorneys get involved in an M&A situation. It seems like that's where the process slows down. Things move along quickly. There's agreement. Let's move this forward, and then we get stuck in sort of contract hell, it seems like. So,
Lord.
Could you just tell us a little bit about your background and how you got to this point?
Yeah, certainly. Yeah, I like to say that, I have this toolkit and I just keep adding to the toolkit so that I can deliver value in whatever area that I'm working in. So I spent my first 10 years as a product marketer. And really got to delve into being an entrepreneur and being on the product side and launching a .com and even getting acquired. So I really felt kind of that end-to-end experience on the business side before going to law school. Out of law school, I had the great fortune of working at Cooley, a large, fantastic law firm, and really grew up as a lawyer there. And then about 6 years or so ago now, I had the opportunity, working with a group of people that I worked with on the business side to say, what would happen if we just looked at M&A differently? And I really put my product marketer hat on, right? And said, how would I productize the legal side of M&A?
Yeah.
And what would it look like if we built playbooks and consistent processes and leveraged technology in a world where we aren't always incentivized financially to be able to operate that way? So it was sort of a unique opportunity to say, what would it look like if we did it differently? And I even went so far as to say, in the banker world, we see deal managers all the time, right? I mean, when you're working with a client, there's, someone who's running the diligence room, and there's someone who's sort of handling the administration. And more often in the law, we don't get that. A lot of times we might have a junior lawyer that's handling that, but otherwise in a boutique world like mine, your lawyer is doing all of it. And that costs money, right? Every minute that I spend on a deal costs money. And we started to say, well, what if we teased all that apart and really looked at it differently? And that is where Speed M&A was born. And what I often say is my goal is to transform legal from a cost center into a competitive advantage. So exactly what you said, we were able to say, what if you added a deal manager in the legal part of what was happening, and you built these templates and playbooks and leveraged technology so that when you got to the legal part, it actually is what sped up the deal instead of slowed down the deal.
Yeah, no, that's fantastic. So Can we talk about the playbooks for a second? Because I think that I love that concept, and I think about systems and processes really create efficiencies. So are these playbooks, are these things you hand to the client and say, hey, I need you to execute on some of these pieces, or are these just internal playbooks that you guys use internally to like keep the process moving along as quickly as possible?
It's really a combination, and it varies whether we're working on the buy side or the sell side. But you and I share some clients together who like to buy companies. And whenever I'm working with a buyer who, ideally is buying sort of three or more companies, that's where you really start to build out efficiencies. We are building a curated playbook for their particular risk profile. And then we've actually set up, we're working with some technology folks out there who are fantastic. I'll give them a shout out, HiQ and Deal Closer. And our buy side clients have their own client portal where they're able to log on and see all of their deals and what their templates are. We're able to quickly build LOIs through there. We're able to have collaborative checklists. So some of what slows us down is literally like emailing a Word document, right? Back and forth. And so in our world, we have a checklist that we're able to invite the other lawyer to. And so we're all working in the same place, signatures instantly hitting those closing binders. And so the more that we work together, the more we're able to develop that playbook. And what is that playbook really about? On one hand, it's about process, right? What happens first, second, third, and fourth. The next layer is what matters on the diligence side to that client, right? What are they most worried about? And how are we delivering that information in the fastest way possible so that we can act on it? And then the third level is terms. And so we start to say, okay, we know you're comfortable with this set of terms. As long as these are the comments we get back, we can instantly make the change. If we get this next set of terms, here's where we're going A, B, and C. And this next set, let's hop on a call and figure it out. And so the development of the playbook, the baseline is the same, but we end up curating it by client. On the sell side, we're then able to leverage all that experience so that a seller can get an experienced lawyer at a fraction of the cost. A lot of times, sellers will use their corporate lawyer that they've been using for years, who's really great, but maybe doesn't have as many reps in doing deals at that moment that I have or someone on my team has. And that again allows for sellers to take the same advantage of everything that we've built for buyers.
Yeah, that's fantastic. And I want to just highlight an example of we were involved in an M&A deal. You were representing our client. The client being acquired, the other client, there's a different party being acquired, and it was interesting. We were trying to solve a problem, and I went back and looked through our email, and I found you had identified this problem like very early on in the process. Like, hey, everybody needs to be aware of this. Well, they didn't double check to make sure that they were okay on that side of things, and it was creating a $2 million tax problem. And I just look at the value of bringing somebody into the equation that has the experience, has the reps, has been through the ringer, has seen the things come through. Like the value of that ounce of prevention creates a ton of it prevents a ton of cure on the back end. Like this is a problem we don't have to solve, because it was, I remember being in the meeting with, it was like the Hollywood squares of Zoom, all of these folks hopping in trying to figure out how we're going to, resolve this issue. And I was like, if somebody just would have listened to Robyn a long time ago, we wouldn't be here. So
If you just listen to Robyn sooner, we'd all be better off.
right, exactly right. So, and I think that leads me to like the experience that you bring. Like there's so many different areas that we have to be aware of, right? There's the tax piece, and like you highlighted a tax problem. Now, there's also the legal contract piece. There's the negotiation side of things. Like it seems like you've got um, experience in, I'll say, a process for all of those different pieces. I'm really impressed how all of that's sort of come together in one spot. And is that really just from spending the time doing these types of transactions? Is that where all that came from?
That's a good question. Yeah, I mean, I think that is part of it. And one of the things that's been really interesting, I mean, AI hit the stage in like November, September. I mean, it hasn't been that long, and obviously people have been working on it for a while, but the amount of tools that have come out in that short period of time are remarkable. And I'm now hearing from, legal colleagues and paralegals of, oh, AI is going to take my job. And I think what's important is that everything that you just described, AI cannot do, at least not yet. And what we really need to do as lawyers, as advisors, is embrace technology to leverage where it can actually add value in the things that are repeatable, that can be measured and modified and put into processes, so that our true value, which is in our strategic ability to look at multiple parts of the transaction and recognize, as you and I often talk about, that people aren't rational actors. And we have to be, right? There needs to be a voice in the room that can help irrational people who are actually rationally irrational, right? These are their babies that they're selling, right? This is meaningful to them. Or this is a point in the deal where employees and customers are being impacted. And so while we have irrational actors, they're actually being rational in the way that they're acting. But we have to step in and be able to see the forest from the trees and provide that right strategic guidance. And I do think that's the experience, right? That's the
Yeah,
experience you
absolutely.
bring to the table, which is why I love sending people to you. That's the
Hmm.
experience that I bring to the table to say, okay, we're all looking over here, but let's not miss how this thing interacts with that tax issue that we really should be paying attention to. So use
Yep.
processes, leverage technology to get the noise out of the way and make sure that we're still focusing on where the biggest issues can occur.
Absolutely. And I feel like, back to your point on AI is really good at spitting out an outcome, right? Like if I ask it a question, it can give me an answer. But who's asking me the right question? I think back to your negotiation template. Like, hey, these things we can move on, these things we can't. Like, you know, those are things that AI is not going to spend the time asking me and understanding about my situation, that are, somewhat irrational. Like, the price might be super valuable to me. Like, I might need a really high price because I need to talk to my friends about it at the country club, and I can give away all sorts of other terms, where AI might look at that and go, no way, this is a stupid financial decision. We're not going to give you a good outcome there. So yeah, I absolutely agree with that. And we think about both the, like, there's the dollar and cents. There's also the, like, what's important to you in your life side of things. And most of our planning comes around, trying to get you to what into your life, not necessarily just the best economic answer. So I love that approach. It's all about the strategy. That is,
Yeah. Yeah. And the qualitative part, right? Well, what we say is like, what are your dreams and goals? Right. And for me, what's going to keep you up at night?
mhm,
Right. So I say, the banker and Patrick, they're
yeah,
going to make sure that like the economics are in the right place. And I'm going to make sure that you can sleep at night, because that's where your liabilities are going to live.
yeah, absolutely. So, is there, because I think of this, most entrepreneurs are so tied up in the business, okay? Like, M&A, financing, private equity, all these things are like, they're things they've heard about, but they're not familiar with. When somebody comes to you, how do you, I want to know, when is the good time to engage with you and your firm? My guess is sooner rather than later. As soon as you start thinking about the process, we should probably get you plugged in. But, like, how do you help clients sort of walk through all of these, I'll say, new arenas that they're maybe unfamiliar with, either on the buy side or the sell side? Because there's they've had their head down, like, working on the business side for quite a while, and now they've got to figure out all these new things.
Yeah, definitely. Right. So on the sell side, we're looking at exit planning. And I think that, I always say at least a year out from when you're thinking about it, because we want to make sure that, really where your expertise is. Because yes, there are some things we can do right before the deal and right in the deal to help you out from a tax planning point of view. But if you could give us a year, there's a lot more that we can probably get done for you. So I really like to say, at least a year out, if we can start thinking about these things and bringing the right team together, right? That's the other thing, right? Is when I step in, I say, look, I'm here to be a quarterback and I have to know when to run the ball and when to throw the ball. I have 4 boys. So you're going to get a lot of sports analogies from me. And so it's about bringing the right team together. And at the same time, I always say, we're not going to spend legal dollars before we need to. So let's make sure that you know who's in the foxhole with you, that you have the trusted group around you, that you have a timeline of what are the things to clean your house today, get your house in order so that you're ready to hit the ground when the right opportunity shows up, right? Because we always say in our household, it's not just luck; it's opportunity plus preparation, and that's really what we're here for, to help on that side. And similarly on the buy side, even with, like, I have a number of clients who've never bought businesses before, and I say, look, if you want to grow your P&L, grow your people, or grow your tech, the fastest way to do it, and there's so many opportunities out there today for seller finance deals, for people think like I need $100 million before I can buy a company, and that is just not the case. So it's really about getting the word out, and the education of what are the deal structures that we're seeing, and how can you really start to think about M&A as a real tool for growth when you can do it fast and you can do it cost effective.
Yeah, no, that's great. And it's interesting on the buy side, because uh, rarely do we see a transaction come together where the seller's not participating in the financing in some capacity, right? And that can look like lots of different things: earn out, a note, something along those lines. Because I think most of the time the buyer's like, I want you sort of still in this thing. I want to encourage you to make this transition go well. I want to make sure that all of the relationships that were there, you said were there, are going to stay there. And oftentimes we see these. The best deals seem to be win-win deals, right? Like the seller gets what they need out of the transaction, because a lot of times they're like, I don't know if I necessarily want to. I'm tired of grinding in this business, but I don't know if I want to hang it up completely. I don't even know what my life looks like after the fact. So if I can still, play golf with a few of the relationships, and that sounds attractive to me. And then the seller gets, or excuse me, um, that's on the seller side. The buyer gets some peace of mind. Like, okay, cool. I've got this set of knowledge that's going to come with me through this sale that I can continue to lean on to make sure that this deal goes well. Because it's awfully scary. We look at this business when we're a buyer and we go, okay, I see how it's performing, but when I apply a bunch of debt to it, like there's not a whole lot of room in the short term to like have this thing not go well. And so I really need to make sure that we are having a smooth transition, and that I'm not buying something that's going to blow up on me here. And how about I think one area that I'm not that familiar with is the private equity side of the equation, where I see some of a decent sized player buying up a smaller player, or equal size player. But private equity is something that is sort of unfamiliar to me. We've got some clients that are exploring it, but not anybody that's sort of gone through that route particularly. Do you get involved in doing private equity, like the large private
Yeah.
equity firms? Yeah.
Yeah, quite often, particularly driven deals.
Yeah. Um, so can you just like, how did those, um, I guess I'm asking more out of my own knowledge. Like, how did those deals come together? Is private equity out there looking for a specific type of business, and they go, "Hey, we've identified one. Let's approach them and make an offer." Because we've had a client that's been offered some pretty healthy numbers from private equity, but he's like, "I'm not ready to sell yet. I want to stay there." How do you see those deals coming together?
Yeah, I mean, it's a combination, right? I mean, there are private equity firms that know what they're focused on and are looking for deals. And they're looking, they are really happy to get in without any other buyers there, right? And so we're out there, working with clients, and they're sourcing deals directly through their various networks. And then the other one is that, you're working with a banker, and that banker has a strong group of relationships with the right private equity firms and brings that opportunity to them. And there are some, from the, mid-market size and up. And so I think that what's interesting, when you're working with private equity is there are a different set of norms, I find, than when you're working more on the strategic kind of mid-market or lower market deals. And a lot of on the private equity side that I'm doing with sellers is saying, look, you're getting a strong financial partner here, and these are the norms. These are the things that you're going to give up. There is a new sheriff in town, and sometimes that new sheriff has a very strong opinion on how things should be done, and sometimes that new sheriff is the type that says, you know how to run your business, you've done a great job up till now, like, come along. But I do find that it's a very predictable process, which can be very comforting. One of the things that we do see is reps and warranty insurance used more often in those deals, because those deals tend to be on higher valuations. If it's a tuck-in deal, it'll be smaller, and then you're not in that world. But we in the last 5 years, we're seeing reps and warranty deals, down to even $25 million deals. If I had one of my brokers on now, he would say he could do 20 million or 15 million. But generally speaking, if insurance is going to cost somewhere between 150 and $250,000, you're usually around a 25 million at the lowest end. Deal before that would make sense, but that really changes dynamics between buyers and sellers. Also, when they're relying on insurance, there's more flexibility, in other areas. And speaking to the win of the deal, I always say it's a good deal when each party walks away feeling like they won something and feeling like they lost something, right? Like, it's never going to be the perfect situation. And in what you're talking about, when things get really heated, I remind folks that I'm writing the prenup, right? Like, no one ever plans on the divorce, and no one likes the time of the prenup, but we have to come together. We have to think of all the scenarios and make sure that we have a roadmap if and when something happens that nobody ever expects to happen, but that the day after closing, everybody's really excited to move forward together, and that's true whether you have a strategic buyer or you're working, with a private equity buyer.
Yeah, no, that's fantastic. So when we think about b- before we hit the record button, we were talking about quality of earnings. I feel like there's some things that people need to have sort of buttoned up before they're ready to sell, right? Like, if I can verify the quality of my earnings, it's so much easier for a buyer to come in and go, yes, all right, let's do this transaction, versus looking at the books going, what a disaster. I can't tell heads from tails of what's going on here. So outside of quality of earnings, what other pieces sort of make a lot of sense for people to, and this could be part of the like early engagement. Hey, I need to make sure all of my I's are dotted, T's are crossed. What does that list look like?
Yeah, what does it mean to get that house in order? The very first one, it is financial. At the end of the day, being able to show your numbers and back up your numbers is really important. Whether or not you spend money on a sell side, quality of earnings varies. I am all about not spending money until you need to. In a lot of cases, it might make sense. The biggest thing is really making sure that the numbers, match what's actually happening, or you have a way to describe it, right? I've had situations where you look at the quoting system for a client and there's triple the number of quotes, but it turns out that the way that they quote, they do, multiple quotes on a renewal. And so you're trying to figure out, how did you get from quote to close? So being able to have those, that in order is really important for folks to be able to look at your EBITDA and say, yeah, okay, this actually makes sense to me, where this is coming from. So number one, I always say, is your financial house. And then the next thing is your contracts and your legal house, right? Are all of your contracts in one place? Are they all signed? One of the things that I'll do with clients early on is give them a sample diligence list and say, go build this and just start putting your contracts in it, right? Do you have your formation documents? Did you issue your equity the right way? And I have some clients say, issue what? And hopefully more often than not, they just don't realize that they signed a document that, some great lawyer gave them. But one of the things going into the deal that I always tell a seller is, I want the easy stuff to be a check the box, right? I want the other side's legal team, the
Yep.
buyer's legal team, to look through the folders and say, "Oh, that's there, that's there." I don't have to question the rest of this, because the moment that it's not that way, then they go down a rabbit hole that we just don't want them to go down. So, what do we need to do in the financial house to check the box? What do we need to do in the contracts house to check the box? What do we need to do in the HR benefits and employee section to check the box? Because that's what my ultimate goal is going into, when it comes time to be ready to sell, that we just, we're spending more time on the things that matter, and we're not spending a whole lot of time on going down rabbit holes that we don't want anyone to go down.
Yeah. No, that's fantastic. And this sort of falls into that. But one of the things that we spend a lot of time like, and I'm just curious your perspective on this. So, a lot of the tax planning, the business is a great opportunity to do a lot of income tax planning for clients, and so that can lead us into a scenario where, like, oftentimes the way we account for a lot of these things is we'll have, uh, you know, income, expenses, and then we'll have other income and other expenses, and that other expenses column is where we will put a lot of the, we'll say, owner. Uh, I don't know, fringe benefit type things like, oh, my
Fences.
kid, yeah, my kids are on
Yeah.
payroll and here's my vehicle and here's, some of these other things. So is it, I imagine if the books are buttoned up nicely, it's not hard to get some of those add backs sort of back onto the bottom line. But yeah, I didn't know if you had any thoughts on that, like if there's any best practices that we should be aware of when we're consulting with our clients on some of these tax strategy ideas to make sure that at the end of the day, we don't want to hurt enterprise value. If we save, a dollar in income tax, but it cost us $7 of value, like that's not a good deal. So, yeah, I want to make sure that we're participating in best practices there. Is there anything that you see that like gets sellers in trouble when they're doing some of these we'll call them tax strategies that we need to be aware of?
It's a good question. I was literally just before this conversation on a call about this matter. And I think that, it is about, again, keeping that financial house in order. And so making sure that bank accounts are properly managed separately, and that money is moving from one bank account to the other and is being tracked, whether it's via, loans. Like a lot of our clients, right, have more than one company, and so money moves because you have a single owner. And so it just feels like it's all the same. And so one of the things that we do is make sure when money's moving, that we're able to track what that is and the way that the money has moved for the purposes of characterizing the taxes and the financial statements of the company. So know where your money's moving, manage your bank accounts properly and separately, and then think about how you position the value of the company, right? So if you go to a buyer and you say, I'm worth X, but I didn't take into account the ad backs that you're talking about, don't make it hard for the buyer, right? That's my philosophy. Come in and say, and here are the ad backs. Because then we're not arguing about it later or saying, wait a minute, the multiple was on this X, but it's actually Y. And so I think that most people just aren't mindful about it because we just run our businesses. We're just trying to get through the day, right? And so having the right advisors around to piece that apart so that when the buyer shows up or when you're talking to the buyer, you're able to separate those things out makes a huge difference.
Yeah, absolutely. And I think you hit a great point on having everything buttoned up when you sort of deliver it to the buyer as a seller. We think of the same thing when we're going to financing. For we work with a lot of our clients on real estate and that type of thing. We have a packet we help the client put together that is like, here's the tax returns they're going to ask for. Here's the personal financial statement. Like when we show up sort of proactively, here's our pro forma of how the property is going to perform, those key metrics we know the bank's going to be looking at. It's like when we show up and hand that to them in a way that they've never had it before, they're like, okay, I'm dealing with a different type of borrower here. And this is an opportunity. Like they don't look as deep into all of the nitty gritty as they maybe normally would because they're awfully comfortable. I'm thinking the same thing's true on the when I'm going to sell, right? Like if I've got all of my stuff buttoned up, I'm highlighting all of the key things that they're going to be looking for or concerned about, from the financials to the ad backs. Like it's going to give some confidence to the buyer that okay, I've got really good info here, and I don't have to like run down the rabbit trail of reconciling every expense to the P&L. So that's good stuff. Yeah. What other things do you see that derail transactions? Like what's popping up out there that like gets things off track that we should just be aware of that we can avoid on the front, have to fix it on the back end?
That's a great question. I have the good fortune of closing most of the deals that I do. And I think that's because of the buyers and sellers that I work with and the work that they're doing on the front end of the LOI, the letter of intent versus the back end. But I do think that when deals don't work out, it's usually because expectations that were set up going into the deal turn out not to be true. That's generally what I find. And more often than not, it leads to a purchase price reduction. And the seller decides that that isn't the deal that, they're willing to do or ready to do. But for the most part, we really try to create an environment where deals get done versus not getting done. And so honest and open communication, creating trust from the very beginning, and being able to work through the unexpected, I think, is the key to deals getting done. Now, then there are buyers, and I have some buyers that simply say, this is attractive. I think we're at this number that we all agree to. We're going to go under LOI, and then we're going to look under the hood. And when we looked under the hood, we figured out that you have 10 customers and six of them are talking about leaving. That deal's not getting done, right? In most cases. And so being prepared, right, for the fact that, folks are going to look under the hood and they're eventually going to want to talk to your customer relationships and, where that stickiness is, and preparing for that, for the long haul. The other thing that is really important is that, for Speed M&A, our goal is get in and close fast. We have historically had an average close rate of 30 days, which is very fast in the industry. But that is on the basis that buyer and seller are on board with that. Everybody's working together. Everybody's bringing the right stuff to the table. The minute that someone doesn't, your time's going to go out. Deal fatigue is a real thing. As a buyer and even more so as a seller, you're running your day-to-day business, and selling your business is a full-time job. And so, making sure that you have the right team around you and making sure that you have mentally prepared yourself for the long haul, I think is actually a huge part of it, because I do get to points in deals where sellers are like, I'm just done. And you can't be just done. Like there's going to be an issue. There's going to be something to work through. We have to lock arms. We have to get through it together and get to the other side of it. And so being prepared for the mental challenge of getting through the deal is something that I think is also, really important to have awareness around.
Yeah. Yeah, that's really good. And I think one thing you highlighted there is so many businesses start off with uh, I'm going to call it an amateur arrangement, financial, legal, the whole thing, right? Like it is, you know, like you said, um, I might not have any clue how, my business is set up. I don't know who owns what, I like, and I think there's a level of as a business grows, as I'm starting to make real money. I have to start building a team around me. I need to go from the bookkeeper down the street to, you know, bringing in-house or having a controller or a CFO. And then same thing with my legal team and finance team. It's like I need to start bringing professionals around me. So when it's time to do the deal, everything's legitimate. Like all of my I's are dotted, T's are crossed. And it's not this, I've been buying groceries out of my business account, and now I have to somehow reconcile that. Like it just doesn't work. And it's interesting as we see clients sort of move from, the $250,000 net income, like that's generally pretty sloppy. They're just hustling, trying to make it work. But once we get north of $1 million in net income, it's like clients start to get their act together and get a little more organized and bring a team around them because they've figured out like my best time is focused on the business and driving the revenue and getting that net income, number as high as I can because that drives my enterprise value. And so I'm going to hand off as much of this crap as I can to people around me that are competent. How, uh, your firm can get people, the entity documents set up, and I could see being engaged with if somebody has the thought process in mind of I'm going to sell this business someday, um, they start off from entity setup to IP protection, all of those things. Make sure that those are all buttoned up. When we get to the finish line on the sale, it went well because we started a long time ago getting those things going. Is that a fair assessment, like on how you see these successful deals happening? It's like, okay, these people have their act together, they're well organized, their finances are, buttoned up, and everything's moving smoothly.
Yeah, I mean that is like right. That is what we want for folks, you know. And I always say that I look at companies like they've gone through school, right? Like I have my kindergarten companies and I have my elementary school companies, my high school companies, and what does it mean when we're transitioning from high school to graduate school? And how are you leveling up your entire team at each stage, right? And even like my companies that are now going to get ready to go public, and I call Cooley, right? Folks can call other firms. Obviously, I have that great relationship there and say, okay, it's time to level up, right? There is a place for the boutique work that I'm doing, and there's a really important place for the big law work that they do because we do need clients to level up at each stage. And the question is, when do you do it, and with who are you doing it, and how are you doing it? And that's really why we provide in a boutique setting that full service experience. So that you can start with us, you can graduate to us, and we can work you through those stages. And also, I really feel the right people are the ones who are going to know when to introduce you to the people that you need in that next stage, right? And have the relationships to be able to move you through it. So, another example, like when I have companies that are sort of in the stage where they have board meetings, right? So it's not just a single owner, but we have board meetings. I attend those board meetings because inevitably there are conversations where we leave and I say, we actually need to document that IP relationship that you're doing over there, right? Or, you have a trademark and you've got a business that's very consumer facing and you didn't know that that trademark had been abandoned, right? There are little things that you just don't have time, or I always say you can't know what you don't know, right? When a client says, oh my god, I can't believe I didn't do that, I always say you can't know what you don't know. It is our job to be watching out for those things. And I think that it is, ideally you've started out that way, but if you haven't, at the time that you're leveling up in the field to bring in someone like you all, that is absolutely the time where you want to say, okay,
Hmm.
what is the right legal team? What experience do they bring to the table? Right? Why is this going to be the right group for me? And who, I always say, who you can text in the bathroom.
Hmm. Right. Yeah. Yeah. No, that's great. And we touched on some IP. I think IP is one of those things that from my perspective, is totally forgotten about. From a protection perspective, uh, it sort of sits out there and people don't think about it until it becomes a problem. And so, if you don't mind, can we just talk briefly about like what kind of IP should people be protecting? Like, I love the fact that you've got Speed M&A trademarked. Like, that's awesome. Like, I think those are things that people need to be paying attention to because what we don't want to have happen is like we start building a brand. We've got some of these assets, that we're developing for our processes, and then all of a sudden, somebody's ripped it off and is using it out there in the marketplace. We're like, hold on a minute, that's mine. What are you doing? And if we don't take the proper steps, we can be exposed there, right?
Yeah, certainly. I mean, and I think that, a lot of people think IP and they immediately think tech. And so if I'm not a software company, I don't have IP. There's nothing for me to pay attention to, right? But like I work with a ton of marketing agencies and their brand is IP and their processes are IP. Protection is an interesting thing because in our day and age, most of this stuff is public, right? I mean, even when I talk about my playbooks, you go to a conference where I'm speaking and I'm giving you the playbooks. And so you really start to say what is protected and what isn't protected. And I think that, when you have a brand, particularly consumer facing, right? On the business to business side, we actually do see a lot of companies start out and not necessarily spend the money on a trademark because if they happen to have to change the name of the company, it can't be the end of the world if you have to change the name of the company, right? But if you're if you're consumer facing and that name really matters to you, then it is worth making sure that you have the legal protections, that are important to you. But I do think that part of the shift in IP focus sometimes has been that things are moving so quickly that we're not and we're putting so much out there in the public that it isn't trade secret, right? It isn't sort of uh, protected in that way. On the one hand, on the other hand, we already talked about AI, right? We're seeing hundreds of patents that are being put in for this new technology, and those are getting approved. And so I think the biggest thing and the biggest takeaway is talk to the right people, right? Have a conversation with your lawyer, have a conversation with us and say, here's my business, here's what we're doing. Is there anything here that we need to make sure that we're protecting? Is there something patentable? Is there something that we should be filing a trademark for? Or no, that we're not. And what does it mean if there's an issue down the road? I think the number one thing that comes up, particularly in the smaller industries, marketing agencies. I do work in other areas where people are taking photos on behalf of the company, and they almost never get what we call an IP assignment. I literally was just working with an agency that had, an infringement problem because of it, and we had to modify the process. So, paying attention to when you're hiring other people to develop IP for you, and making sure that you have that IP properly assigned is really going to matter to your buyer down the road. That's something that we really try to pay attention to because it's one of the things that's almost always missed in the when we're first starting a business and in the smaller business world.
Yeah. No, that's great. Thank you for that. I think, connecting with you, your legal counsel, to just have a quick IP audit, like what assets are out there that are important that we need to protect, I think is a key piece. We talked about intellectual property. Let's talk about human capital. We just touched briefly at the beginning of our conversation about this new FTC ruling around non-competes effectively being unenforceable. So they've sort of thrown all of those out. So if I go buy a company, right, the owner gets payday. The key people don't necessarily get a payday; they just get to keep their jobs. There's some concern if all that key talent leaves. This business isn't worth near as much as what I paid for it, and I might have just fired up some competition to go out there and start something that's going to compete against me. So, is there any safeguards that? And I know this, I think this headline hit about 3 days ago. So, is there anything I can do as a business owner to maybe take some of these things into consideration, or you guys started looking at this as an opportunity to just be paying attention in these transactions?
Yeah, I mean, I think we saw this coming for a little while, and we're taking a pretty conservative view with our clients and saying, just don't do it. This is simply not an area that is available to you to restrict an employee. There's a lot of nuance to this, so I don't want to make any broad statements. So I will say that we've elected to take a pretty conservative approach on this. When it comes to, as we sort of talked about, non-competes as it relates to owners and folks who are getting compensated in the deal process, that has not specifically been restricted. But I do think this does create tension for employees who are not part of that compensation structure. And I think that folks are going to need to be mindful about creating real opportunity and incentive for employees to stick around. Um, at the end of the day, and I don't necessarily think I don't think that's a bad thing. I think that, and this is pure opinion. This is not legal advice of any nature. Let me be very clear about that. But I think that the idea that we're going to create environments where employees are excited for the next move and are being compensated for their value is a good thing. Uh, and on the one hand, and at the same time, I'm very sympathetic to buyers because I represent them often to say, if you're going to spend money on a business, you don't, as we said, we don't want that same, person setting up shop next door the next day. So I think that there's a delicate balance there. Folks have spoken as to where they think restrictions, as a general matter, again, this is a very nuanced set of rules and regulations. So I'm going to, Surgeon General warning, like talk to your lawyer, talk to your specific situation in your specific state, et cetera. And I think that the general view, which we have seen coming for a while, is that, restricting an employee from being able to go and, work in the same industry in similar capacities is not going to be available in the same way that it has been.
Yeah, and I think I agree with you. From my perspective, like I tell our team, like you're obligated to do what's in your best interest, and if that means leaving our firm, like I get it. The cool thing is like when you create an environment like that where you're helping people be the best versions of themselves by having a career path that they can move along, you're compensating them at or above market value, and I think all of those things come together to help retain top talent. But I do get it, like anytime a new buyer comes in, there's always going to be a few questions around like, what is this going to be like? Am I going to like being here?
Yeah.
And so I can understand having some of that language built in there, but I also, from my perspective, get like let's just create an environment that's so good people don't want to leave it. And I think we also have to remember that as entrepreneurs, we think everybody's sort of wired as an entrepreneur. Why wouldn't you just go start your own thing? So many employees want nothing to do with running the day-to-day operations of a business. They're like, I like doing this thing. I just want to keep showing up and doing this thing.
Yeah.
And so I think that's a piece too. I feel like when we try to hold on to something really tight, it just it's not the best way to manage it. Nobody likes
Doesn't
that.
work,
So,
right?
yep.
Yeah, I will add that, confidentiality is still a real thing to protect, and trade secrets are still a real thing to protect. And making sure that you do have agreements with employees that have confidentiality obligations in place and clear, ownership of IP of the company is added protection, right? That protection has not gone away. And so I think that, it sort of underscores, the importance of putting in some of these, form documents that a lot of people don't do when they're first setting up a company. Things happen informally. You've got people going in and out. You're hiring people over an email. But at a minimum, getting that, NDA, that confidentiality agreement in place is really important.
hmm So, Robin, we've covered a lot of ground. We've talked about sort of everything from the playbooks, working with I'll call it professional or constructing a professional team around you to help legitimize every aspect of your business, having clean data from contracts to financials, and then be organized when you go hand your stuff to a potential buyer to make sure that the transaction goes well. And then we've also touched on everything from intellectual property to human capital. Is there anything else we should be talking about on the M&A side of the world that our listeners need to be aware of when they're starting to look into these transactions?
I think we really have covered traveled quite a long way in this conversation. You've done a great job sort of guiding it that way. And I think, again, the biggest thing is making sure your house is in order, making sure that you have the right team, and really knowing that, one of the things that I talk about, one of my goals of Speed M&A is that we're democratizing scale, right? I have a client who says that M&A solves all problems. And I always say, well, if M&A solves all problems, why isn't everyone doing it? And I think that a lot of the reason that folks aren't doing it is because there's an asymmetry of information in the marketplace, where really big buyers know that this is a great way to grow a business. And entrepreneurs who are looking for that $150 million exit know that it's a great way to sell a business. But there's a whole lot of open, available activity from $1 million to $50 million that is available as long as people know that it's there. So I think the biggest takeaway is know that M&A, know that selling your business is an available path to you, sooner than you might realize, and know that growing your business, a lot of folks are like, I grew a pool services business and it went to $1 million and I want to grow it to $2 million. Well, the fastest way is probably buying your competitor. But people don't realize that they can do that. They don't know that they don't need $50 million in cash day one to do it. So my biggest, thing is know that it's available as a growth tool. Know that there are ways that we can structure these so that you don't have to wait to take advantage of what's out there.
I love that. So, Robyn, what is the best way for people to get plugged into you? Like we're sending clients to you all the time, but what is, if somebody's listening to this and they're like, I need to connect with Robyn and her team, what is the best way to do that?
Sure, absolutely. I believe that you're going to provide my email. And so emailing me is fantastic. You can also go to our website. So Speed M&A is part of Jones and Spross, which is our firm. And you can go to our website at www.jonespross.com and be able to send out, an inquiry there. But feel free to email me anytime, and happy to talk, happy to spend 15 minutes with anyone.
Fantastic. Thank you. We will have all of that information in the show notes. So if people need to find if they're listening to this while they're running or driving or what have you, we can, they can find it safely when they're not doing those things. So, yep, we will have all that info in the show notes. Robyn, this has been fantastic. Every time we connect, I feel like I'm learning new things. So thank you so much. You have a great day. Thank you for tuning in to another episode of the Vital Strategies podcast. We appreciate you joining us every week. Before you go, remember to visit vitalstrategies.com/client if you want to set up a time to discuss your tax and financial strategy that will help you grow your enterprise value for when you decide to exit your business. And if you enjoyed today's episode, don't forget to rate and review our podcast on your favorite platform. Your feedback helps us continue to deliver valuable content that resonates with you. We'll see you next week for another episode of the Vital Strategies podcast, where we help entrepreneurs pay less tax, build more wealth, and live a great life.